SpaceX's Starship, the biggest rocket ever built, tried to lift off last Thursday and never left the ground. 4 of 33 booster engines failed to ignite. The system aborted itself, and SpaceX is now gunning for a Monday reattempt. Meanwhile, SPCX, the space ETF that basically eyes SpaceX exposure for public investors, took a sentiment hit, and the entire space stock basket sold off with it. Nothing in this video is financial advice. I'm not your financial advisor. This is for educational and entertainment purposes only. Do your own research before putting any money to work. So here's the question on every space investor's mind right now. Is this Starship abort a reason to sell, or is it actually a dip buy setup? Let's start with what SPCX is trading at today. SPCX is the Procure Space ETF, and right now it's sitting in the mid-20s after taking a knock from the abort news. The ETF's largest effective position is SpaceX exposure through secondary market marks, so when Starship stumbles, SPCX bleeds. That's the mechanical reality. But here's the thing. SpaceX isn't sitting on its hands. They swapped out the 4 bad Raptor engines within 24 hours and targeted a Monday window. The abort was literally the system working. An automated safety shutdown caught a problem before ignition. That's not a catastrophic failure. That's engineering doing its job. And if Starship nails the Monday attempt and successfully deploys those 20 Starlink V3 satellites for the first time, sentiment could flip fast. We're talking about the first time Starship has actually deployed operational payloads. That's a massive milestone for SpaceX's commercial launch business. Meanwhile, the small-cap space names, RKLB, ASTS, LUNR, all got dragged down in the sell-off. Not because their individual stories changed, but because when the big SPCX ETF bleeds, the whole sector trades like one stock. I've talked about this before. It's a capital flow story, not a thesis story. The fundamentals didn't change, only the price did. So right now, you've got 2 trades to think about. The SPCX sentiment bounce if Starship launches Monday, and the beaten-down small-cap space basket as a re-entry opportunity while the panic is still fresh. Let's break down what actually happened with Starship Flight 13, because the details matter for sizing up the risk. Starship is a 2-stage, fully reusable rocket. The booster, called Super Heavy, has 33 Raptor engines. The ship on top has 6. Together, they produce about 16 million pounds of thrust at liftoff. Nothing else in the world comes close. On the day of the Flight 13 attempt, the automated abort system triggered during engine ignition. 4 of those 33 booster engines didn't come up to pressure properly. SpaceX's flight computers detected the anomaly and shut the whole thing down before the rocket left the ground. That's the system performing exactly as designed. Now, here's what's important from an investing standpoint. SpaceX didn't treat this as a major setback. They announced engine replacements the same day and targeted a 90-minute launch window starting at 5:45 p.m. Central Time on Monday, July 20th. That's the kind of operational tempo that tells you a lot about the maturity of their ground operations. Flight 13 was also going to be historically significant. For the first time, Starship was set to deploy 20 Starlink V3 satellites, not test payloads, real, operational Starlink satellites. V3 satellites are the next-generation constellation, bigger, more powerful, and a key step towards SpaceX's goal of degrading competitors' market share in broadband. A successful deployment would validate Starship as an actual commercial launch vehicle, not just a test article. And that's the investing hook. Every successful Starship flight reduces SpaceX's cost per kilogram to orbit. Lower launch costs directly improve the margins on every satellite constellation that depends on SpaceX, including Starlink, including government payloads, and downstream, that flows into the revenue potential for companies in the broader space ecosystem. Rocket Lab's Neutron is targeting a maiden flight in the Q4 2026 timeframe. Their Electron rocket just expanded its partnership with BlackSky. 4 more launches, making 17 total since 2019. That's recurring demand, that's a backlog, and that's the kind of steady-state business that makes RKLB valuable even if the market's trading it like a meme stock right now. ASTS just raised $1 billion in convertible notes, 1.625% due 2034, initial conversion price around $79 a share, with a capped call that raises the effective dilution ceiling to about $149. On the surface, dilution. In reality, runway and constellation build-out capital. BlueBird's 11 through 13 are targeting early August on a Falcon 9. That's 3 more of the biggest direct-to-device satellites ever built heading to orbit.
and ASTS says they're already in production through BlueBird 37. The space mission calendar is stacked right now. The abort is a speed bump. The underlying execution is intact. So how do you play this? The simplest trade is the SPCX sentiment bounce. If Starship launches Monday and successfully deploys those Starlink V3 satellites, expect SPCX to recover some of the abort day sell-off quickly. This is a binary catalyst. It either works or it doesn't, and the market hasn't fully priced in a successful outcome yet. For those who want to keep it simple, stock exposure in SPCX ahead of Monday's window is the cleanest play. Small position sizing makes sense, given it's binary. For those who want to look at options, and I want to keep this plain English, not a lecture, the basic idea with a short-dated call on SPCX is that you're paying a premium to participate in a quick upside move without risking your full principal. If the launch works and sentiment bounces, those calls can move fast. If it doesn't, you lose what you paid for the option. That's the trade-off. Keep any position size small given the binary nature.
Now for the longer duration thesis, the beaten-down space basket. RKLB around $68 with options activity showing 68% calls and significant put hedging near $50 tells you the market is genuinely uncertain about direction. But zoom out. Rocket Lab has a real backlog, real defense contracts, neutron in development, and a vertical integration story that nobody else has at their scale. The stock is down from where it was, not because anything broke, but because capital rotated into SPCX when the IPO mania peaked. That capital rotation unwinds eventually. It always does. The question is when, and the answer is usually when there's a tangible catalyst. A successful neutron test, a major contract announcement, or simply SPCX stabilizing and letting investors look at the small caps again. ASTS is a different kind of trade. The $1 billion raise scared short-term holders who hate dilution, but the conversion price is $79 a share, which implies the company and its underwriters see the stock heading significantly higher from current levels. The capped call at $149 effectively protects existing shareholders from extreme dilution. And August BlueBird launches are a real, near-term binary catalyst. If those satellites deploy and start generating commercial revenue data, the stock reprices. Risk check on all of this. Space stocks are volatile. Starship abort number 2 would be a second sentiment hit. Interest rates and risk-off macro moves can hammer all of these names regardless of mission outcomes. Position size accordingly, and never bet the house on a single launch window. Let me be straight about the risks before you do anything. Starship could abort again Monday. SpaceX has a track record of pushing through, but this is a rocket engine replacement turnaround in under 48 hours, and rocket propulsion doesn't always cooperate with tight timelines. The broader space stock basket could stay compressed longer than anyone expects. Capital rotation into SPCX is a real macro dynamic, and it doesn't have a fixed reversal date. RKLB could trade sideways for another quarter. ASTS could see more dilution rounds before satellites generate revenue. The key principle I keep coming back to is this: separate the stock from the mission. The missions are succeeding. The launches are happening. The constellations are being built. The market is just slow to price that in. And that's actually the opportunity window for people paying attention. If today's breakdown on Starship, SPCX, RKLB, and ASTS was useful to you, hit subscribe. We cover space investing every week, the missions, the money, and the moments that move the market. Nothing in this video is financial advice. I'm not your financial advisor. Past performance doesn't predict future results. Space stocks are high-risk, high-volatility investments. Do your own research, size your positions responsibly, and never invest more than you can afford to lose. I'll see you next episode.